in this session, we are going to discuss the importance of retirement planning. We do generally plan for several stages of our life, but the one thing which we generally ignore, which we have observed, that is a retirement. We all know that today we are working, and a day will come when we all will have to say thank you to our current organizations or to our current work, and will need a peaceful life where we can spend some time with ourselves and with our family. So that is retirement. So in the coming slides, we are going to discuss that how can we plan diligently for our retirement and why there is a requirement of planning of the retirement part. As we know that when we talk about retirement, we talk about the longevity. So generally, in India, the longevity is increasing, and so is the retired people, the 60 plus people. In India, currently, the retirement age is considered as 60. It may vary from organization to organization or place to place, but generally it is 60 years. So we have observed that as per some data sources, that currently the 60 plus people percentage is 10%, means every 10th person is 60 plus, which is going to be double by the time we will be celebrating our 100 years of our country's independence by 2047 or 2050. So it will be supposed to be projected to reach by 19.50%. So which is a situation where the every fifth person will be 60 plus. And the life expectancy, because of the medical situations are improving in our country, the life expectancy is also increasing. And we have also moved from the defined benefit system to defined contribution system, wherein the people has to contribute themselves for having a retired pension at the retired time we need to have. We have also seen that the middle class in our country is growing, which means they need a improved quality of life. And thus, this also leads to the increase in expectation for the decent retirement income the time we get retired. So today is the time when we have to think about it. Can we go to the next slide? There are some demographic details which is changing, which I want to share with all you here. That our current population is 1.4 billion in 2019, which is supposed to grow to 1.6 billion in 2050. Although the population growth is not that much, which we are observing here, the part is there is to look at the percentage of population of 65 plus age people. The 65 age plus people, which is 6.4% now, is supposed to grow by 13.8% the time we will be having 2050. And this also leads to the increase in the dependency ratio. Dependency ratio says how many people are dependent now out of the total population. So 18% is a dependency ratio in 2020, which is supposed to grow by 32% in 2050, which says out of 100 people, 18 people are dependent. Uh, However, by 2050, it is 32% people who will be dependent upon. And since number of working population will be less at that time, so there is a more responsibility for us to take care for ourselves now, so that our kids at that time will not having that much of burden. As we also know that we are also shifting from the nuclear family system, shifting from the joint family system to the nuclear family system, which says there will be more expenses for the maintaining of the family because of the nuclear sizes, and the requirement of making arrangements for the decent retirement life will be onus lies on us now. So with this, I request to move to the next slide. We have tried to bring some picture here which shows that what happens when the time a person is earning. So the needs of household expenses are regular payments like uh, credit card EMIs or health insurance EMIs or life insurance payments or home insurance payments or EMIs for car. We all do make regular payments from the salary. We do generally have go for restaurants. We do go for entertainment. We do have groceries. We do go to office. We do have personal expenses and health and medical expenses. All expenses are being taken care in our from our salary when we are the time we are earning. now we see that what happens the time we do not have salary, the time we got retired. The next slide, please. All those expenses remain same. Household expenses would be there, the electricity bill, water bill, gas bills, cable TV bills, or the telephone bills will remain there. Some regular payments will also be there. Food expenses, grocery, naturally we are going to have that groceries at that time also. We may sometime go for outing with our family. The transport expenses to our office may decrease, but at that time also we require a vehicle because the mobility will be an issue. The time we will be having 60 plus of our age, the mobility of a person decreases. At that time, we require a vehicle so that we can move from one place to another. There will be a good increase in the terms of the medical and health expenses. So all these expenses will be needed at that time also. However, the salary will not be there to fetch them, to feed them. So in that way, the savings which you are having today will going to help us to meet all our requirements at that time. Because since our kids will be moved to the nuclear family system or they may be having their own responsibilities at that time, so we should think now to make arrangements so that we will not be dependent on them. So next slide, please. So how NPS can play a role in your retirement planning? So let's this here we are going to discuss the architecture of NPS. NPS is a unbundled architecture, which means every entity which is performing a specific role is specialized in their role, and because of which the cost under NPS has come very low. When we compare to any product in any financial world, it has a cost. Since many of the products available to you are bundled product where one entity is performing several work, which may bring some cost to them. However, under NPS, every entity which is specialized in their role are deputed or appointed for that purpose. Like when we talk about where you can take NPS from, so point of presence plays a distribution role. They are all banks. IDBI Bank is a point of presence which provides through which you can take NPS account. And since they are having a very good distribution channel, so that's why they have been appointed there. All banks are appointed there. And this brings a reduction in the cost because they are already having a setup with them. Then we come Central Record Keeping Agency. These entities are specialized in the central record keeping part, like Protean, NSDL, which is the earlier name they were. CAMS, which is a registrar also. KFintech is a registrar also. They are specialized in their work. They have been appointed as a central record keeping agency in the system, which takes care for the all transactions which any subscriber is making. So they are this also since they are expertise in their role, so it also helps to bring down the cost. Currently, the banker of the system is Trustee Bank, which is Axis Bank currently acting as, and then the pension funds. And these pension funds are the investment companies through which you make your investments. All investments which you are making, contributing through IDBI Bank here, will be given to the pension funds for further investments as per the choice of the subscriber. And the custodian is a Deutsche Bank currently who keeps the all securities with them. The time when the subscriber gets retired from the system, they will be providing uh, pension through annuity service providers. And all assets are being maintained in the name of NPS Trust, and PFRD is the regulator for them. So we are going to discuss in the detail for these things of activities and roles and the architecture in further slides. Next slide, please. Here are some features of NPS. As we discussed earlier, that the cost under NPS is very minimal. So it gives a upper hand in terms of the attractive returns. Under NPS, the returns are very attractive. We are going to discuss the returns part in the subsequent slides. And you can also compare with the other products available in the market. And since charges are very low in this NPS, uh, that's why the returns are very, when we compare to the other products, this makes a very attractive product to take on. This is transparent. All transactions which you are making, all contributions which you are making, you can see them at any point of time, and you can access your account online at any point of time. This is a unique portable PRAN. PRAN is permanent retirement account number. This is unique and portable. Today you are working in a particular city. Tomorrow you move to another city. The same PRAN will be continuing. Today you are maybe working in a particular corporate. Tomorrow you move to start your own venture or move to another company, or you move to out of the country also. This account will remain same, and this is a unique account which maybe which is you are allowed to move from one place to another, or one country to another, or one corporate to another. Tax savings are available under NPS both in the new regimes and the old regimes also. We are having a subsequent slides on that. Flexible choices, the choice of the pension fund, choice of the CRA, choice of the point of presence, choice of the asset allocations, all are available with the subscriber. And we have discussed many times that the cost is very low. There are an organization IOPS which study the pension structures of the all countries who are providing this. And when we discuss NPS charges on those in IOPS, they have found that India's charge structure is an outlier, because in when we compare the charge of the NPS, it is very low with comparison to the other parts of the country which they are providing any pension product in their country. So subsequent size में हम समझेंगे. Please move to the next slide. Yes. Under NPS, this is a sort of plan how it looked like. Under NPS, there are two sort of accounts. One account which is called Tier 1 account. This is a pension account. Whatever the contributions you are making to this account, you will be having pension out of it. All tax benefits are available under Tier 1 account. And since it is a purpose account for this providing pension, that's why several restrictions are placed into it. A minimum contribution a person can make in a financial year under this Tier 1 account is only 500 rupees. And sorry, it is 1000 rupees. An account required for opening this amount required for opening this account rupees 500 only. There is no maximum limit on the contribution side. And there is another account which is Tier 2 account. This is an optional account which could be open at the time when you are opening a Tier 1 account, or it could also be later on can be opened through you. Since it is an optional account, there are no restrictions on the withdrawal. At any point of time, you can make withdrawals from the funds. Say today, on the day one, you are making contributions. Day 10, you want to make withdrawals, you can very well do so also. There are no tax benefits are available. The minimum amount required for activation of this account is 1000, and minimum contribution required per financial year is 250 rupees only. There is no limit on the maximum side on the contribution. So next slide, please. So like every financial product, NPS also has three phases: entry, accumulation, and exit. So when we talk about entry, any Indian citizen who is in the age of 18 to 70 years of age can enter under NPS, and they just need to comply with the KYC requirements. So when you enter in the system, you make contributions, and that contributions grows. And when the time you turn 60, or the retirement age fixed by your organization, at that time, you are having an option to take lump sum amount and the annuity. Annuity is the part where you will be getting pension. Now, what are the roles different entities plays into it? Point of presence, like as I discussed earlier, IDBI Bank is a point of presence. A person who is individually wants to take NPS, they can very well come through. Or they want to take it through the corporate or their employer, they can very well do so also. Pension funds, whatever the contributions we are making, they have been invested by the pension funds, and that contributions is being converted into units, and NAV is being declared on the regular basis. Central record keeping agencies, the contributions which you are making or the modifications you are making in your account, all record has been kept thoroughly by the record keeping agencies, and they are the one who allocates units to you on the basis of the NAV and the amount you are making investment into. Next slide, please. There are three currently agencies which has been acting as a central record keeping agency: Protean, KFintech, and CAMS. And there are 10 pension funds which are all prominent names: DSP, SBI, LIC, UTI, HDFC, ICICI, Kotak, Aditya Birla, Tata Pension, and Axis Pension. They are all prominent names in the industry. They are currently acting as a pension fund. Being a subscriber, you have a choice to choose any of the CRA, any of the pension funds. At any point of time, you want to move from one pension fund to another pension fund, that options are also available. So please, next slide. Under NPS, we are having in the asset allocation, active choice and auto choice. One who is well versed about the market situations, they can very well opt for the active choice. Here the decisions are taken by you. The maximum amount of equity investment allowed is 75%. And the remaining 25% needs to be invested into corporate bonds or the GSEC or the alternate investments. However, if a person wants to make all investment into corporate bonds, they can very well do so up to 100%. And even they can go for 100% into government securities. Alternate investments are a riskier avenues. That's why the maximum limit allowed to them is only 5%. Whereas the person who is not well versed about the market, they want to go with the uh, they want to go as per the life stages of their investment into equity as per the life stages. So where there are four funds comes into picture, which we call LC75, which is life cycle fund, in which the equity exposure maximum allowed is 75%. And by the time the person is turning to 35 years of age, thereafter, every year, the time of the birth, the date of the birth, accordingly to date of birth, the equity exposure get reduces, and subsequently the percentage of investments into GSEC and corporate bonds increases. Another is LC50, wherein the maximum amount of equity investment allowed is 50%. And the same, the time 35 years of age of the person comes in, the equity exposure reduces from equity from 50%, and subsequent amount get increases into GSEC and corporate bond. The person who is do not want to take much equity exposure, the LC25 comes into picture, wherein the equity exposure maximum allowed is 25%, and by the time 35 years of age of person comes in, it reduces and subsequent investments increases into GSEC and the corporate bonds. There is one more life cycle fund which we call balanced life cycle fund, under which the tapering of equity starts from 45 years of age. So it is LC50 modified version of LC50, wherein the maximum investments into equity allowed is 50% only, and the tapering starts from 45 years of age. The subscriber has a choice to change their pension fund. As we discussed, the 10 pension funds are there. The subscriber has a choice to change the pension fund once in a financial year. And they can change their investment option 4 times in a financial year. They can go from active choice to auto choice, or within the auto choice they want to change, they can very well do so. So 4 times it is allowed for them. So next slide, please. To ensure that the funds are invested diligently, some investment guidelines are being made. The equity exposure is allowed only to top 200 NSE or BSE stocks, or the stock exchange traded funds, or the index funds. There are some restrictions for the corporate bonds also, under which the investments can be made, and for investments can be made to the sovereign bonds of any duration and the state development loans. To ensure that investments, industry exposure or the entity exposure or the group entity exposure are being maintained, limits are being done for that, so that concentration risk could be avoided. Next slide, please. We were talking about the good returns under equity and the different schemes available under NPS. So they are the details. Since when we talk about pension, we always talk about longer term. That's why we have tried to calculate CAGR, and it is an average of return provided by the all pensions together, pension funds together since inception. So as on 13th of July, under equity, the average of provided by all pension funds returns as 13.21%. The corporate bonds are providing return of 9.18%. GSEC is close to 9%. There are three different schemes which is provided for central government scheme, central state government scheme, and Atal Pension Yojana. All of them are providing more than 9% return since CAGR. Next slide, please. We have talked about investments, we have talked about returns. Now time when the person wants to get exit from the system. Exit can happen in two ways. One at the time when we are turning 60, another time when we are before 60, we want to exit from the system. When we are exiting at the time 60, which we call normal exit, at that time the total corpus amount can be taken
There is a
6.
disturbance.
I hope I'm clear now. Audible now to you?
Yes,
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 sir, you're
yes.
audible.
Yes.
The lump sum amount can be taken out in a 60%, and the remaining amounts needs to be the 40% amount needs to be taken for the purpose of annuity. Say example, over a period of time, you have accumulated 1 crore rupees under NPS. So in under this example, 60% of amount can be taken as lump sum. 60 lakhs rupees comes into that scenario, and remaining 40 lakh rupees needs to be used for the purpose of annuity. Uh, if a person wants to take annuity for the whole amount, that is also possible. The minimum amount needs to be used for annuity is 40%. It could be extended to the 100% also. However, if a total corpus is less than 5 lakh rupees, in that way, the subscriber has a choice to take all amount in a lump sum go. If a person is exiting from the system before the age of 60, we call it premature exit. In that scenario, only 20% of amount is allowed to be taken as lump sum. The remaining 80% needs to be used for the purpose of annuity. Considering the same example of 1 crore rupees corpus, if a person is exiting before the premature time, in that way, 80% of amount, which is 80 lakh rupees, comes into this scenario, needs to be used for the purpose of annuity. However, person has a choice to use for the whole amount for the purpose of annuity also. In a scenario when the lump sum amount is less than 2.5 lakh rupee, the subscriber has a choice to take away the whole money with them. In unfortunate event of death, the 100% of corpus will be given to the nominee. Next slide, please. This is a scenario of number of subscribers and the AUM. Under whole architecture, around 15.50 lakh crore rupees is being maintained by the different pension funds taken together. And the subscriber base, which is including NPS and the APY, is 8.68 crores. On the corporate sector, people have chosen 24 lakh people have chosen NPS, and under all citizen model, 43.65 lakh people have chosen NPS. And this is the status we are telling you as on 13th of July. So next slide. This is online facilities are available. The person can check their account in a online mode through application, mobile application, and by logging through their two respective CRAs. So user ID password will be provided to every subscriber, and they can very well check and operate their account online also. Next slide, please. This is a scenario we have tried to create. If a person is entering early, making a contribution of 5,000 rupees, and a person is entering late at the age of 40, making the same contribution, there will be a difference in the total corpus just because of 5 years person has joined early. So it is always advisable to join early so that you can grow your corpus in a decent way. Next slide. So if a corporate wish to join this NPS, they can very well do so. There is no cost of joining for the corporate, and there is no need for them to formation of trust. They will be just simply choosing the point of presence, which is IDBI here, and they can very well help their employees for their retirement planning. If a corporate wishes to make contribution for their employee, they can very well do so. If corporate wishes only to become a facilitator, they can also very well provide this facility to their employees. And if required, they can also restructure their salaries so that people will be getting benefit out of it. So lock-in period is 60 years. However, partial withdrawal facilities are available. Partial withdrawal facilities says 25% of the contribution of the 25% of the contribution the person is making. In the example which you have taken earlier, 1 crore rupees is the total corpus. However, the person has made the contribution of 40 lakh rupees only. Say for example, so the person would be required to partial withdrawal of 25% of the contribution, which is 25% of 40 lakh rupees, which comes to 10 lakh rupees. So purpose of this account is to give pension. That's why the partial withdrawal limits are being kept low. And we understand that over a period of time, some situations may come where the person may require some funds from their total corpus, total amount. So that's why the partial withdrawal facility is provided. Next slide, please. And they are the tax benefits. Uh, Tax savings under NPS is allowed both in old tax regime and the new tax regime. Under old tax regime, in addition to 1.5 lakh rupee, which several different products are also providing, NPS is also part of them. In addition to that, additional 50,000 rupees contribution can be exclusively made to under NPS, which comes under section 80 CCD 1B. So in this way, the total tax saving under old tax regime a person can make through NPS is 2 lakh rupee, which is 1.5 lakh rupee and 50,000 rupees. When we come to the new tax regime, NPS is the product which is having tax benefit there also. So as the earlier slide we discussed, how a corporate can provide. So under new tax regime, the tax saving is allowed when the employer is contributing on the behalf of the subscriber. So up to 14%, of the basic can be claimed under tax. Say example, 1 lakh rupee is the basic, say for example. So 14% of that amount comes to 14,000 rupees. So if an employer is contributing 14,000 rupees towards NPS account of the subscriber of the probably of their employee, that account will be claimed both by corporate and the employee as a tax benefit. The employer, which is a corporate, will claim it as a business expenses, and the employee will claim it under tax benefits. However, the total tax benefit under this can be claimed by an employee up to 7.5 lakh rupee in a financial year. When we talk about benefits on taxes part, if a person when just exiting there from the system, the 60% of corpus which they are taken, that amount will not be treated as their income. The 40% amount which is required mandatorily to be used for pension, that amount also not attracts GST. And if your person is going individually and opting for this annuity part, they are supposed to pay GST. However, if a person is opting annuity through NPS, they will not be levied GST. The partial withdrawals which is allowed in the system are also tax exempt. So they are all tax benefits available under NPS. So next slide. And all sort of people, all walk of life professionals, they can join NPS. Either you're a professional or working in a company, you're a shopkeeper or any professional, anyone can join NPS. So this is all about NPS from my side. Thank you, ma'am, for this providing me this opportunity to discuss about NPS for all gathering here.
Thank you, Devesh sir. We have received a couple of queries in the chat on NPS, which we are requesting the participants to share the phone number with us. We will be reaching them after the webinar. And thank you for your very valuable insights on this. I hope it will bring a lot of light into the options that our investors have apart from regular known investments. NPS is still something we would like people to know more about. And we are looking forward to more such sessions in the going ahead in times. And we may now have Mr. Pravin Bokade address the session. Devesh sir, hello.
Yes, ma'am, can I leave now?
Yeah, that's what, sir. You can you have another meeting that we know.
Yes, ma'am. Yes.
The question answers on NPS will be addressed by the IDBI Bank corporate office team. If anything is further required, we will get in touch with you. Thank
Thank
you,
you.
sir,
Thank
so
you.
much.
Thank you, ma'am. Thank you.
Over to you, Praveen, sir.
Hi everyone. Hope I'm audible.
Yes, sir, you are audible.
Okay.
Thanks for bearing
Thank.
with us and being there.
Nice.
And
Yeah. No problem. Good morning, everyone, and thanks again for joining the today's webinar. So I have a short time, so probably I will quickly present myself, and then we can have some question and answer at the end of the webinar. Uh, so the headline of my webinar is signs of an economic slowdown or cyclical blip. This is I'm talking about the Indian economy. All right, so there are some indicators which are indicating a decline in the overall economic activities and which is reflecting in the stock market. So, as usual, I'm going to talk first about the global markets and global economy, what exactly is happening. I will make it quick. I know some of the participants they are not much interested in global economy, but then we can't avoid the global economy and global market because it has ramifications on the Indian market as well. So overall, what we are seeing is that in the last 1 or 2 months, geopolitical tensions are abating, the wars are receding, not much of an intensity in war in Russia, Ukraine as well. Whatever the import duties the Trump has imposed, they are still going on. Discussions are still going on. Every day Trump comes on the Twitter and then he tweets a lot about the duties. But then the market has now discounted that. That is why the global markets are at all-time high. We have seen S&P 500, Nasdaq, Japanese markets, European market, they are all at all-time high. However, if you consider the valuation, in terms of valuation, S&P 500 trades at a roughly 1 year forward P of around 22, which is higher than its 10-year average of around 18.5. So valuations are clearly high in European market. There is a reason why the market is still going on, why the market is still going up in or probably holding up well in the global market. That we'll see. So uh, policy uncertainty is on the back burner. Corporate earnings are strong in US, especially from the tech companies. We have discussed that in the past, but this for this quarter also, earnings from the large IT companies and mid-sized IT companies they are very good. So so markets overall are rallying due to potential deregulation that Trump has talked about. Trump has is talking about his big beautiful bill. So this deregulation, especially in the banking sector, tax cuts. He is going to cut taxes on corporates. US first policies that means focus on reindustrialization and possible interest rate cuts. These are the and of course the AI capex. Capex is very very high in US markets right now. So these are the reasons why the market is rising in US, although holding up. These are the reasons that will infuse huge amount of liquidity in the market. So that is why the market is overall reacting positively. Yeah, but then the something strange is happening in the US economy as well. That we have seen. Since Trump came, some imposed import duties on April 2nd. It's been now more than 3 months. So during that period, US has collected almost 100 billion from these import duties. But despite this fact, the inflation in US is not rising. Inflation is still very low at around 2.4%. Corporates, their earnings are very good. So where is this duties? Who is paying these duties? Basically, these duties are being paid by exporters like Japanese, Chinese companies. But the question is how long they can continue to suffer margins. They will have to pass on this hike in import duties to some extent going ahead. So that will lead to higher inflation, slower growth, and that will have a negative impact on market as well. that these imposition of import duties will impact the market with a lag. The lag will be 1 or 2 quarters going ahead. So over a period of next 1 or 2 years, we might see market volatility rising, but not unless inflation picks up in US. So I talk about inflation picking up in US. What are the signals? What are the indicators the market will give? We'll have to focus on bond market. Bond market will give us proper signals where the inflation is heading and ultimately where the market is heading. Currently, yields on bond, especially 10 year, 20 year, 30 year in US and in Japan, they are very, very sticky. 30-year yield bond yield in USA is at an all-time high. Same with the Japanese bonds, 10 year, 20 year, 30 year, and 40 year yields. They are rising rapidly despite lower inflation in US and inflation in Japan is rising. So that is a big risk to the market going ahead for the next 1 or 2 quarters. We have to clearly observe the bond yield, what the bond yield is suggesting us. And there's also talk about the Fed cutting rate. But then Fed chairman, he is not willing to cut rate. But at the same time, Trump is forcing him to cut rate. Otherwise, he's going to sack Powell. That is what he has said for past few weeks. But then if you sack Powell, that will again have a negative ramification on the market. Market will take it negatively. So overall, the scenario is not that negative for the market, but we'll have to see shocks. Overall, I guess the market is well placed to consolidate and to rise. Now let's come back to the Indian market. So in Indian case, we are seeing that various high frequency economic indicators they are slowing down. In fact, we have been talking about these indicators since last 3 or 4 quarters, and then everyone thought that indicators would improve. They are not improving rapidly. Probably they are bottoming out, but then we'll have to focus on those indicators and the impact of those indicators on the markets. So despite RBI efforts, RBI cut interest rates by 50 basis points and CRR by 100 basis points starting September. The growth momentum across key sectors is weakening. So most of the economic indicators they were growing at double-digit rate, and now they are slipping to single digit, which was the case pre-COVID as well. Now, in the next few slides, you will see which are those indicators which are not doing well. The most important is the loan growth, banking loan growth. So, despite monetary easing, despite the rate cut, and despite the liquidity push from the RBI, overall it's a great uptake. Great uptake means the loan growth is very, very slow. It's very, very tepid, in fact. It's not growing. For a large country like India, it should grow at around minimum at around 14%. But then the credit growth dropped to around 9.4%. These are the latest numbers for July 11 compared to last year's 19%. So we have seen the drastic decline in the overall credit growth. The main culprit in overall credit growth is the credit to industry, which has slowed to 4.8% compared to 9.4%. See, the important parameter to observe is that large industries, they are not taking too much of a debt and they are flushed with cash. That we'll discuss later. So overall, this demand for credit, coupled with the lack of credit transmission of rate cuts, is the major culprit to uh, the growth in the credit, back in the growth in the credit. So, but we'll have to see. We can't just come to the conclusion with this one or two figures, because monetary transmission takes around 2 quarters to take effect into the ground. So it has a lag effect as well. So we'll have to see this whether this indicator is growing or not in the next few days, a few months. So this is the data point about I'm talking about the credit growth. See, non-food credit growth has been declining since almost from January 24. You can see this red arrow going down. So same with the deposit growth. Deposit growth is more or less you can say flat, though it is declining, not much compared to the non-fruit credit growth. Next is GST collection. The GST collection, though it is growing, it is not declining, but growth rate is declining. See, for the last many months, the growth was more than 6%. September 24, it was 6%, and since then it was 9, 10, 8, 12, and increase up to 16.4% in May. Now, suddenly in June, it has dropped to 6.2%. So, as I mentioned, growth is there, but growth rate is declining, which possibly indicates a slowdown in the consumption and slowdown in the business activities at the ground level. Export figure. Export, naturally, there's a lot of variables in exports. The geopolitical scenario, a lot of import duties play around, China dumping. So export growth is also slowing down. Look at the March 25 to June 25 figure. It has been declining consistently since the last 4 5 months. So that is again a worrisome aspect for the Indian economy. Passenger vehicle sales is again slowed to around 2% compared to 7% last year. See, since January 2025, the red arrow shows declining trend. Since January, it has been declining consistently, and in June, it has gone down. I think almost for the last 14 15 months, the level is lower. Housing sales. This is from the as per ANOROC report. Housing sales across top 7 cities declined to 96,000, the second lowest in a quarter in 2 years. So you can see these are the 7 cities. The decline YY in all the cities. There's a decline YY. Hyderabad has seen decline of 49%, Mumbai region 26%, Kolkata 30%, NCR 20%. Uh, Reason maybe the steep rise in prices. Property prices across the board has increased a lot in most of the major metros, even in the tier two and tier three towns. That might be the reason the sentiment is slightly weakish in most of the metros. Industrial production. So industrial production expanded by 1.2% in May compared to 2.6% in April, and market was expecting 2.4%. So almost 50% decline from the market expectation. And this is one of the weakest pace of industrial growth since August 2004. If you see the again red arrow, which has been declining from January 25 to May 25, I think this is a reason to worry. Why the industrial production is declining? Again, the reason might be weak demand, sentiments are not very positive. Another red flag in the market currently is promoter offloading their stake. Many promoters and PE investors they are exiting continuously from their market. So generally, historically, promoter selling is the one of the indicators of market taking out. I'm talking about generally. It is not a rule. So between June and September last year or so, many promoters offloaded their stake near the market peak, and after that, the market started declining till March or so. Similar thing is also unfolding probably this year as well. Many promoters are there exiting. And who are the buyers? We'll see in the next slide. This is the chart which shows that the promoter stake in top 200 companies was 43% in FY21. Now it is down to 37% in FY25. So since last 4 years, since FY21, promoters have uploaded stake was almost 3,60,000 crores. So 3.6 lakh crore they have sold in the market. Some of the examples are ITC in the British uh, tobacco company, BAT, they have sold in ITC, Bharti Airtel, promoter sold, Indigo, Vishal Mega Mart, Bajaj Finserv, Hindustan Zinc. In these companies, promoter sold their stake, partly. So it's been observed historically as well that the promoters, they are good in timing. So this time also they are timing their exits. They are seeing that the valuation is very high, so they are reshaping their ownership dynamics. And who are the buyers? The buyers are majorly mutual funds. Mutual funds are getting lot of sick money, lot of liquidity through retail investors, and then they are also helpless but to buy the company stake at a very high valuation, despite the high valuation. So in MS Holding stake in BSE 200 companies rose 10.9% during FY21 to FY25. So the rise was around 3.6%. And in the first half of this calendar year, from January to June, domestic investors were net buyers worth 3.5 lakh crore, while FPIs were sellers worth 82,000 crores. Lower promoter holding listed India's free float market cap, which drives up India's weight in the global indices. For example, India's share in the MSCI Emerging Market Index rose from 8% in 21, 18.2% in June 25. China's weight is around 28%. So in a way, this is positive also, but then positive only if the FI's money are coming back. But FIs are not coming to India, FIs are they exiting. So next is a corporate capex. We have discussed this in the past as well.
Praveen sir, Praveen sir.
Yeah,
Hello. Sir, what is FPI? Someone is asking exactly.
FPI is
FPI.
foreign portfolio investors.
Okay,
So
okay. You
basically,
continue, sir.
if,
Oh, yeah,
yeah.
yeah.
So
Absolutely.
basically they are FIs.
Okay, yeah, yeah, yeah.
Okay. So corporate are not doing capex. Capex was driven by government only in the past many years, especially after COVID. So corporates are sitting on a healthy cash level despite rising profits. Their profits are rising, their balance sheets are healthy, and government gave them tax breaks, tax cut in 2019 as well. Right? So government's intention was good. Government thought that a corporate, if you give a tax cuts to corporates, they will invest, they will get higher profits, and then they will start investing, which will create employment. That has not been happening. Corporates they are not doing capex. They are very very cautious. They are holding cash worth almost 5 lakh crores. Imagine holding cash worth 5 lakh crores and not investing in projects. Of course, I'm not saying that corporates are not investing, but investment rate is very, very low. That is the problem. So new project announcement fell 5%. It's been declining in FY25. While in FY24, the decline was 3%. Maybe they are seeing that there is no broad-based demand recovery. From the perspective of corporate also, we can say that unless and until there's a demand, unless and until the sentiments are positive, why I need to invest, right? So we have to think from both aspects. Government's intention was good, but corporate also has their valid point. So rather, corporates are focusing on cost optimization and price hikes to boost their profits. So what the corporates are doing with their cash? So they are paying out dividend. So the dividend payout rose 11% in FY25, 4.9 lakh crore. See, this 4.9 lakh crore is almost very close to 5 lakh crore. So corporates are okay with giving out dividends, which is highest in a decade. So their dividend payout rose by 11% and net profit growth rose by 9.5%. So they are paying more dividend than they are earning because they don't see any opportunity. They don't see any potential of the rise in consumer demand. Unless there is a global clarity, unless the lot of dumping stops from China and there's a domestic demand revival, I doubt whether the large scale capex will come up in the next 1 or 2 quarters at least. But again, we'll have to see. This is the cash to total assets. So corporates are holding cash worth around 20% of their total assets in FY25. This cash to total assets has been declining. Yeah, but declining has been due to dividend. They are paying dividend, but they are not investing. Now let us go back to earnings. We have seen that the corporate's earnings season has started, and starting with IT companies. The scenario is again not very optimistic. Many commentary from the IT corporates, IT CEOs is cautiously optimistic, but they are very, very cautious. There is not much of a revenue growth, not much of a earnings growth. Few IT companies, they wanted to make profits at cost of near-term growth. Okay, they will do away with growth, but they want to protect their profit so that the market can rate them properly. Some other companies, they are chasing growth at a cost of short-term profitability. How they chase growth? They can do away with margin. They can do away with they can work with the lower margin, and then they can chase growth. But some IT companies, they are focusing on quality of growth. So there has been some of the large deal ramp up as well, but an overall scenario is not very optimistic. TCS in their commentary has said that many US clients, they were cautious about tech investment given the ongoing economic uncertainty. But then if the liquidity flush is there in the US going ahead, so I think and then banking deregulation takes place. So I think the most of the banks will again start investing. Probably that will be positive for IT companies. But right now, overall, the scenario is not highly optimistic. But though I won't rule them out as well currently. We'll have to see the capex from the US banking sector and then other companies which are dependent. So many IT companies, they are dependent on those US companies. These are the revenue growth and then earnings growth of the companies, few companies which have reported their numbers for this quarter. We have seen that TCS growth is 3%, HCL Tech 3.7%. HCL Tech has reported a 10% decline in net profit. That's why the stock was down. Tech Mahindra revenue growth was 2.7%. But then, as I mentioned, some companies are okay with margin losing margin, and so that's why net profit growth was 34%. LTTS revenue growth was very good, 13%. Net profit growth was 0.7%. Tata Elxsi in both revenue and net profit growth disappointed a lot. Tata Tech again with hype stock, revenue growth is declining, profit growth is okay, 5%. I mean, the scenario is such that companies are not even able to grow their revenue. So for some companies, scenario is very, very difficult, at least for the next 1 or 2 quarters. Moving on to the banking sector's earnings, Axis Bank again reported weak set of numbers. Loan growth was very, very tepid at around 8%. So here we have discussed that in the overall banking sector loan growth was around 9.5% for the last quarter. So you can imagine the loan growth of the banking sector was 9.5%, and then loan growth for the Axis Bank is around 8%. Axis Bank is basically losing market share in terms of lending, in terms of loan. Right? So Axis Bank is not even able to grow their loan book by 10 or 12%, slightly higher than industry average. Their NIM, net interest margin, contracted to around 3.8% from 4.05%. Gross slippages. So which are the loans classified as bad assets? Increased to almost 8,200 crore. 8,200 crore, which is 82 billion rupees from last year's 4,800 crore. Almost double, you can say. not exactly double, but almost 80% rise, which is slightly negative for the Axis Bank. That's why the ADR was down 5%. Instead, the stock was almost down by 4.5 to 5%.
Praveen sir,
Bank says
I have
that,
a doubt.
yes,
Can I ask you now? If no
yeah,
problem. Sir, actually, the Axis Bank result has been weak. So, if the private bank is results are so negative now, is there any possible that government bank will show good results in this quarter, just like Union
yeah,
Bank,
probably,
PNB? Yeah,
yeah,
yeah.
yeah. The point was
So we
good.
request
Uh,
you to reserve all these queries till the end of the webinar. It just disrupts the flow of the presentation. Okay, we
Okay.
have a question answer session. Please
Yeah,
keep a
yeah, yeah.
note. You can post it in the chat also to all the
Sure, sure, sure.
participants. Okay,
Okay.
it helps the because the presenter then gets,
Yeah, yeah, you can go on.
uh, the
Okay. Thanks.
yeah.
Thanks.
so coming back to PSU banks, see a lot of PSU banks. In fact, they are doing well. Their costs are under control. Their loan growth is decent. In fact, they are doing probably 9 to 10 or 12% loan growth. Many PSU banks. But then this is talking about Axis Bank. I doubt whether HDFC Bank and ICICI Bank will show such weak numbers. Problem was with Axis Bank was that they have reported some slippages. They said that they have done some technical classification, some overdrafts, accounts, etc. That is why their slippages increased from 4,800 to 8,200. We'll have to see today HDFC Bank and ICICI Bank how report their numbers. Overall, I guess the story is slightly weakish on the private bank space. Um, for the time being, for the next 1 or 2 quarters, unless there's a demand pickup. Axis Bank is currently trading at a valuation of around 3.3 price to book value, which is highest in the private banking sector. So any negative surprise from the ICICI Bank today, probably the stock will market will punish the stocks. But overall, the PSU banks, SBI, and then the BOP, Canara Bank, overall, I think they are doing well and they are also taking market share. In Axis Bank, I guess they are struggling with the management issues also. Some of the senior staff, they are exiting the company. That's why I think the growth is missing next time. Solar stocks, again, which has been widely held by many players. Solar stock story was good for the last 2 years. But then their best generating days are over now. This story probably speaking out. If you are entering at this high valuation, just be careful. There is a growth. If there is no growth, there's no margin expansion, probably one can be stuck in the stock. Plus, in US also, they have been imposing a lot of input barriers and input duties on many solar panels, and they have been asking foreign players to set up base in US. So margins, if they are very high, that will not expand further. That will keep on shrinking, and so is the valuation. But we have seen this happening to defense some few quarters back. Probably the same story could unfold for solar stocks as well. Just be mindful of the valuation and growth. The margin expansion is not happening. Probably those companies will see re-rating. I mean the declining prices. Now the power sector theme is um, long-term theme. I agree with that. But again, the valuation has run up a lot, especially for the transformer companies. Slight bad negative quarter, the P will derate, P will go down, valuation will compress, and then stock B won't give you good decent returns. Probably, so just be careful about all these stocks. Yeah. So coming back to the Indian market view, outlook of the Indian market. So our view is that valuation is very high in India on a broader market. Nifty 50 is trading at around forward P of around 21 versus the long-term average of 18. But then, despite high valuation, why the market is holding up? So, so market is basically consolidating. Market is waiting for the trigger. Market is for the next few months. I think the unless the until valuation catches up, market will be range bound. However, that said, there is not much of a downside to the market. I mean, when I say not much of a downside, market will go down, but then not much. That is our view. Market will remain range bound, but overall sentiment will be negative for the next 1 or 2 months. So after this consolidation of 1 or 2 or 3 months, probably we should see next cycle again, which won't be very high unless the earnings growth improves, unless the demand is there. Market is not going to go up dramatically. What so valuation is very high. We are seeing earnings growth is missing. What is holding up the market? Why the market is still holding up very well? The major reason is that market is supported by huge liquidity flows. Every month, market is getting almost around 27,000 crores worth of liquidity from the retail money, the retail public, through directly or through mutual funds. Overall, the liquidity is holding up the market, not the earnings. Earnings is not very great. Earnings is okayish. Valuations is again high. Not much of a re-rating further would happen. So only one factor is supporting the market is liquidity. Overall, I guess this is not a market to make big money. This is the market to probably you should need to survive. You shouldn't make too much of a losses. Making small profit is fine for the time being. Yeah. So liquidity. So I was talking about liquidity, right? Which is supporting the market. So overall, SIP amount, SIP amount is growing at a CAGR of around 27% for the last few months, few years rather. So liquidity is forcing many fund houses to buy stocks continuously despite high valuation. For example, mutual fund bought very high P stocks like Dixon, Keynes, etc. So DIs have pumped in almost 3.5 lakh crore in equities in first half of 2025. From Jan to June, all domestic investors, domestic institutional investors, they have invested 3.5 lakh crore, while FIs they have sold almost 1.3 lakh crore. So FIs they are exiting continuously, they're investing in other markets like China and US, and then DIs are continuously infusing money into the market. That is supporting the market. If you see last 1 year return is almost flat. The market is, as I said, is consolidating, is range bound only. The risk to the market is that if the returns don't come up, the liquidity may dry up. That is the risk to the Indian market. But probably that will take time. That is not an immediate risk. So this is the chart about SIP contribution. So in last month, June, SIP inflow was 27,000 crore. And in FY26 quarter one, almost 80,600 crore worth of inflow was there. In the first quarter, from April to June, the inflow was around 81,000 crore. And you can see in FY17, for the whole year, inflow was around 44,000 crore. And now, in the first quarter itself, the inflow was almost double of entire FY17. That is the amount of money coming into the market. In FY25, the inflow was almost around 2,900, 2,90,000 crore. Close to 3 lakh crore inflow was there. FY24, 2 lakh crore. FY23, 1.5 lakh crore. So this trend from FY21 post-COVID has been continuously increasing. And probably FY26, if the market holds up very well, then probably inflow will be around same as last year. So this is the amount of money which is coming into the market, which has been supporting to the market, which has not been uh, uh, that is why the market is not going down. Otherwise, from the valuation parameters, from the earnings parameters, I don't see any logic for the market to hold up at this level. So that's it from my side. If you have any questions, we can start discussing those questions.
Praveen sir, if can I ask question now, if there is no
Yes, you can
issue?
ask.
Sir, actually, yesterday Axis Bank's market was crashed. Okay,
Hmm. Yeah.
near about 7 to 8%. Okay, but after that also the overall market reacted to that. Bank Nifty fall to 500 to 600 point near about. HDFC also have 3 to 4%, 5% fallen. Majorly except ICC Bank. all the banking stocks was negative, and except PNB. Even IDBI also was in negative.
Right.
Even only the Axis have only negative result, and it has nothing to do with the market because Axis
Right.
have their assets had also depreciated. There are many reasons. You are getting my point now, Praveen sir.
Right.
Yeah, yeah.
No,
So what is the
so
exact reason that just just because of Axis the market can't fall? Na? There must be a good reason that FIs are selling so much and market is going down. And Nifty also closed near about 25. It break this level 25,000. No, yesterday.
yeah, so Axis was not the only reason.
Hmm.
See, Axis is a large bank, but
Hmm.
so it can give a signal to the market
Hmm.
that the overall loan growth is not that high. Market was expecting loan growth of around 10 to 12%, 14% from large bank like Axis Bank. So if the loan
Hmm.
growth is not coming, why the and slippages are increasing? That is a worrisome part. Why the
Hmm.
suddenly one large entity is showing slippages, right? So it
Hmm.
may spill over to other bank also. Market is worried about that. Plus,
And sir,
it's not only
yeah,
about
yeah.
Axis Bank.
Okay, okay, okay.
Results from IT companies also they are weakish. So
Hmm. Yeah, yeah.
around 180 companies they have posted results. Small, large, all companies. Revenue growth of just around 3%. If
Hmm.
the economy is growing at 6.5%, where inflation is 3%, at least shows the revenue growth of around 9 to 10%, which all the US companies are showing. But no, the growth is around 3%. That is the sentiment which is hampering the market.
And sir, my next question is sir, that FIs, if you see the chart, the FIs are being near about, they are having a major bearish on the market.
Yes,
Yeah, if you see their futures, they are all bearish. Okay, so if they
yes.
started selling, then is there any scenario that next we will see the February, March like scenes? Because after September last year also they have sold the market after that. And as you told in this PPT and last PPT that promoters also shifting their transferring their equity shares and all the transactions.
Yes. So
So
my worry is that
sir, is that they are thinking that this is the right time to exit because they have all the ground level research on this, all the companies and all the market.
yeah. So problem is that my most important worry is that promoters are exiting, P investors are exiting, P those who have stake, P is private equity. Those who have
Mm,
stake in the companies, they are exiting, FI is
mm,
exiting. And who are the
mm.
buyers? Who are the buyers are retail investors.
No, but
Directly
they are sir,
or
they're forcibly
indirectly.
buyer. No, sir, they are forcibly because DI has the fund. They have to buy. Due to SEBI
No,
regulations,
no,
they can't hold the money. The
no, no.
DIs.
I'm saying is that
Uh-huh.
retail
Mm-hmm.
investors, why they are buying? Because they are getting flows. And flows, who is giving them flows? Retail investors.
Okay,
Right?
okay. But
Ultimately,
sir,
retail investors, they have
market is on the. But sir, pardon sir, but if the market is been on the rise, is that due to mutual fund house or is that due to individual retail investors?
no, it's
What do you
both,
think
right?
about it?
It's money is the same, right? It's all
Oh,
about
ha,
retail
ha, ha.
investors'
Yeah, yeah,
money.
yeah. Money the same. Yeah, yeah, absolutely, absolutely. Okay, and sir, what about your defense stock? What do you think about defense of as that Israeli-Iran war is going
See,
till now?
see, see, defense is
Mm-hmm.
a long-term story. I agree, but then we have to be mindful of valuation as well. Those who are
Mm-hmm.
not able to look at the valuation, those who are not valuation, the valuation are not supportive. If the
Mm-hmm.
revenue growth is not there, margin expansion is not there, that story can play out for the short time based on
Yeah, yeah, yeah.
sentiment. Yeah, yeah, what is happening? I should buy the defense stock. It won't work
Okay,
that way.
okay. And sir, what is the worrisome if the Nifty in which level break, then there is a tense in the market or there is a chaos in the market? Which level it will break as it is now consolidating below 25,000?
Yeah, so I think uh, if it goes down, the probably 4 to 5% downside we should expect for the next 2 3 months if the earnings don't improve much.
So if I make your conclusion, if the market go below 24,400 or 24,300, there will be a panic in the market. Is that right?
Probably yes.
Okay,
Not
okay,
exactly
thanks, sir.
panic, but I think negative sentiments will prevail in the market.
That negative statement will be triggered, nah? That means
Yeah,
that. Okay, okay,
right.
okay. Thank you, Praveen, sir. Okay.
Thank you, sir, for your queries. To Praveen, sir, we don't have any queries on stocks in the chat as of now. So we will keep the session open for three more queries. We are already beyond our time. If any investors,
Yeah.
any participant has any query, we will take 3 more queries and we will close the session today. So any queries? And largely all the chat queries has been answered. To those whom for which the queries we found to be needed detailed discussion, we have requested them to share number. Those who have shared numbers, we will reach them out after the webinar and give them a detailed answer on their queries. So if anyone else is there who wants any specific discussion with Praveen sir, you can unmute and you can ask. The entire webinar, sir, will be posted in the YouTube channel of IDBI Bank and IDBI Capital Market Services in a day or two.
Hello.
Hello.
Yeah,
Am I
I
audible? The entire
yeah.
webinar is being recorded and we will be posting it into the YouTube channel of IDBI Bank and IDBI Capital
Yeah, I
Market
want to
Services.
ask two questions, madam. Hello.
Yes, sir. Please go ahead.
Yeah, I want to inquire about the coming profits for oil marketing companies like IOC, BPCL, their results will be. One question is that. Hello.
Yes,
Yeah.
sir.
Yeah, this oil marketing companies and this gas authority limited, GAIL. Can you suggest me whether to continue investment or disinvest?
Praveen sir.
Okay, so yeah, so overall, we are not very positive on the oil marketing companies because the government interferes with their financials lot of time. They don't have
Uh-huh.
the easy hand to do capex or the set prices. Government will always come and then ask them to reduce or increase the prices, and then whatever the benefits are there, government wanted to take it in terms of dividend. Of course, the
Okay.
shareholders also get dividend, but I don't see any price appreciation, much price appreciation from those stocks.
Okay. What about the cement companies like ACC?
Cement companies are probably a good bet because their valuation is slightly reasonable, and then a lot of construction from the government, a lot of capex from the government is happening. So it's
Okay.
stocks like SEC are probably are good.
Uh-huh.
Sir, I have one question, sir.
Hello.
Hello.
Yeah,
I have one
Yeah,
question.
and Reliance also I want to ask. Please, last question. Reliance.
yeah.
Hello.
Reliance, yeah, result was not that great because and the profit increased a lot due to they sold a stake in Asian Paints. The
Okay.
other income, there was increase in other income, but then Reliance has a lot of other divisions also, which might get listed over a period of time.
Okay.
So if you're not in need of money, probably you can keep on holding Reliance. It's not a bad stock either, but it won't give you a large return as well. But there is a possibility of getting uh, subsidiaries getting listed over a period of time. That will, and they will give it to the existing shareholders.
Okay. Thank you. Thank you.
Sir, there
Sir,
is
I
one
have one question.
question. 1 minute. There's
Sir,
a
there is one
question on
question, madam. One question.
SIP in whether mid or small cap is a right decision to go for now. If you can answer that, and we can take this last query and close the.
Okay.
This Jupiter Wagons, madam, Jupiter Wagons and the Hindustan Construction Company. Can you please throw some light?
Yeah. I'll talk about that. So SIP, I suggest you do in a staggered manner. Don't invest and in one go. Whenever the market goes down, you can invest 60% in large cap and 40% in mid cap in a staggered manner. Whenever the market goes down.
Sir, the other
Then
query, please.
other was on Jupiter Wagon, right? And
Ah,
Jupiter Wagon and
Hindustan Construction Company,
Hindustan
HCC.
Construction Company. Yeah, Hindustan. Jupiter Wagon again is a good stock. It went up dramatically, probably around more than 500. Now it is down to 350 or so. Valuation is reasonable. If you are holding for the long term, probably you can keep on holding. Stock is
Okay.
decent, and overall the market in which it operates is also growing.
Ah,
So I think if you keep on holding, SCC, they were in problem in the past, but then I don't see much of a growth. Yeah,
Uh-huh.
the construction business is very, very capital intensive. They need a lot of all the construction companies. They need a lot of capital,
Uh,
uh, to working capital basically, and then they work on the government projects. So getting money from government and getting money for the working capital is very, very slightly difficult scenario for most of the companies. But having said that, SCC is improving overall. So
uh,
if you are holding it at a cheaper rate, probably I'll suggest to keep it on hold.
no,
Don't
already
exit
I'm
it
in
in panic.
basket.
Yeah, don't
Uh,
exit in the panic. Probably the
that's
stock will gradually will recover.
Praveen, so
okay, sir.
two more
Yeah.
views of your which we received in the chat. REC Limited and Bharti Airtel, whether Bharti Airtel should be hold or sell now, and what your view on REC Limited, and then we close the
Okay.
session. No more queries, please.
Okay. Okay. REC has come to a very attractive level. Um, Now, I think it went till almost around more than 600, and now it is 400. During the boom times in the last year, almost around at the same August September level, when the market started going down, it dramatically crashed from more than 600 to now 400. The re-rating and then growth is more or less over. So you will get normalized growth. Don't expect any rapid growth from REC.
Yes, sir, Bharti Airtel, whether one should hold or sell.
Hello.
Hello, Praveen, sir, audible?
Yeah, yeah, I'm audible.
Bhar
Yes.
yeah, Bharti Airtel, whether one should hold or sell.
Okay. Bharti Airtel, uh, stock is good. Valuation wise, stock is also decent, and then they are having a lot of partnership with large operators, global operators. So I suggest to hold on Bharti Airtel.
Take a question. Hello. Hello.
Sir, with this, we come to the end of our webinar for this month. We look forward to hosting the upcoming webinar in the month of August, preferably on the third Saturday again in the morning. So thank you all for participating. In case you have more queries, you can write to HO Capital Market at idbi.co.in. We will be addressing it through ICMS or through PFRDA, whichever product you have a query on. And the phone numbers that has been shared, we will be reaching out to you post the webinar in some time. And thank you, Praveen sir, for your insightful webinar. And we look forward to meeting you again next month. Thank you all.
Thank you everyone for patiently listening and joining the today's webinar. See you next month. Thank you.